All right, so yesterday we did learn about these two indicators. This one we call the wave trend cross. This is the first one on the top. And then this one we call the TDI, which is the trader's dynamic indicator, right? So these two indicators, we will be using it in our next strategy. They're very, very, very good indicators. There's another one that we're working on that as we progress, we bring out the indicators as we use them. I'm just only going to demonstrate how these indicators work. Currently, the strategy, the 4-2 strategy that we're using, we are not using any indicators. We are only using price actions, which is the how we call it, the candlestick patterns. That's what we're using to trade. So now we want to be able to use the indicators combined with the price actions to be able to trade effectively, right? So now, as I told you, we normally, the psychological levels, we have two levels. We have the main ones, which are called PSL1. I'm going to make a whole video on psychological levels again. We'll start the process all over again. But I want us to lock in the strategy at least so that people can start trading the strategy. Then we'll go back to the whole process. As the strategies evolve, we change the styles that we do on the psychological levels. So on the psychological levels, we have the psychological level 1, which are the main psychological levels, and we have the psychological level 2, which is the minor or the sub-psychological levels. Now I've taken the sub-psychological levels off. All we are going to do is we are going to demonstrate how these indicators work, right? So what I'm going to do is I'm going to switch one off, and then I'm going to walk you through one first, and then I'll switch the other on, and then I'll walk you through that one, and then we'll put the two together. Okay, so now once we've done that, we might do just one more indicator, and then we possibly would run up, or maybe I'll teach one additional thing and we'll run up. So now, what I'm going to do is I'm just going to move this indicator to the bottom indicator, so we have enough space at the top to see the price actions. So this indicator, which is called the WT cross. In fact, I bought an indicator which is very, very literally the same, but it has other things in it. And this indicator, we call it the market cipher indicator. But we discovered this indicator that it's really the same. It's replicating most of the properties of it. But how it works is very, very simple. Now, let's put anywhere we'll see a dot, we are going to put a line in the dot. Anywhere we see a dot, we just put a line in that dot. So then you would understand how this works. So we're seeing a dot here. We put a bit, wow, what's happening? Yeah, we put a vertical line there. Let's color the line. Let's give it a red. Okay, normally yellow line stands out better. So let's give it a quality yellow. Get a full slim yellow line. So anywhere we see, okay, let's let it replicate the color of the dot. So there's a red dot. So when we see a green dot, we put a green dot there. When we see a red dot, we put a red dot. I'm going to walk you through to see how this indicator works and how we can possibly use it in our strategies to come. Okay, so now I put red lines on where the red dots are. I'm going to put green lines on where the green dots are. So we've got one line here. Well, come on. Green dots, green line. That green line is a very close one here. And there's a very close one here. That's a very close one here. This actually very close lines, the green dots. So I might have to go to the lower time frames to demonstrate how they work. Okay. So now for this indicator, we need one red line here. So for this indicator, what happens is that I'm going to go to a lower time frame just to show you how the whole thing works. So let's go to something like the 15 minutes time frame. You see the lines are very big in the 15 minutes time frame, so you can actually see the way the indicator will work based on the lines. I'll come back to the 4-hour very soon, and then we'll see that as well. So we've got the lines. So all we are saying is that where we had the small lines, okay. Oh, we've got more lines. We've got more lines. Okay. I'll demonstrate it this way. You can see what we are saying is that I've put these lines on the 4-hour time frame, but now that I'm in the 15 minutes time frame, you can see what is actually happening between the lines. All you could see is that when we have a red line which depicted where the dot was, you could see that the market started trading all the way down, which means the red dot on the high time frame depicted that the market is going to come down. So the market started trading down. Where we had the green line, which shows that there's a green dot at the bottom, it means that the market started going up, meaning that you can see the market generally going up. We can go up this way or go up that way. And then we had a red line as well here, which depicted a red dot. You can see that the trend of the market was generally coming down all the way down here, somewhere there. And then where do you see the green? It tells you that the market generally starts going up like that. Okay, now let's come off with this trend lines and go back to the 4-hour, and then we see it there very clearly. So we go back to the 4-hour. Let's reset it. Now you can also clearly see it on the 4-hour, and it looks very, very clear. Just that sometimes the dots are very close, and such that when they are close, you don't see the movement, but the movements are there. That's why I had to go to the lower time frame. So, for example, we have a dot here. Let's start from the green dot. We have a green dot here. You can clearly see that the market is going up within that range. It tells you that we are at the bottom and the market start going up because we have a green dot, which means green candles are going to be more. Now we have a red dot, which tells us that red candles are going to be more coming down. We have a green dot, and not shortly after there was a red dot. So between the gap, we have only this green candle at the top. Now we have a red dot. Before the green candle will come, we'll have more trending below. And then green candle came shortly, and then a red candle continues. So we kept going down. And then a green candle came, we went up for some time, and then we had a red candle, which I don't have that. Let me just put that there. And then we came down shortly. So what this indicator does is that it gives you an idea as to where the market is likely to go. You understand? It gives you an idea where the market is likely to go. If it's green, it is likely that the market will go up. If it's red, it is likely that the market would come down, and so on and so forth. You can just test it yourself if you have been able to set it up. I'm going to upload the videos so that you can be able to follow it and then create the indicator. Once you've created the indicator, you can follow it on your price actions. Now, let's look at this very carefully. Look at where we had this price action. This, for example, is a bullish engulfing. And I'm talking about this one. Let's say we've got a bullish engulfing there, right? And then we are on this candle. You know for sure that once we have a bullish engulfing, it means that we are about to go up. And then the thing immediately prints a green there, which means that it's confirmed your information on this candles that we are truly about to go up. Because when we are at the bottom and the bottom is green, we are about to go up. For example, at the top here, we have something like a tweezer top, meaning that we're about to come down. But really speaking, we were at the top of the hill, whereby we went from the bottom to the top. And then you see there's a crossing. Whenever you see that white, it means we've crossed. And that crossing should tell you that we're about to print a red dot, which means truly we will possibly come down. You know what I mean? So then, aside the price actions, which is the candlestick formation that we use on the psychological levels to give us direction of the market, we also use these indicators to be able to tell us what the direction of the market is possibly is going to confirm our our initial analysis that we expect the market to go in a certain direction. So we get it here. We can just use this as what we call confluence. Confluence means you are affirming, you are adding up to your confirmations. So then you can use this also as a guide to tell you that, oh, if this says the market is about to come down and you jump into the trade and you have a red dot printed, which means we are still going to go down further. Do you understand? And then we have this green dot. This green dot came in, possibly you were on this trade. You saw this trees bottom and you went in on this trade. Immediately went in on this trade. You were in the trade, then you realize that, oh, there's a red dot coming. You can jump out of the trade before you start going the opposite way. Do you understand? So these are like things that we use to help us to be able to determine the direction of the market in confluence with the price action or the candlestick patterns that we use for trading. Okay, that's fine. So now I'm going to take off all these lines. Take them off quickly. And then I'm going to go into the other indicator. So the other indicator is the TDI. We just did that. So for the TDI, I need to also demonstrate how the TDI works. We have some settings. We did some settings on the TDI, and I hope you remember. The settings was 5, 11, 1, and 7. And so what it is we have something called moving averages. I believe I might have explained moving averages for you, but moving averages, what it is we realize that price can move very swiftly. Like you see this candle going up, candle coming down, going up, coming down, can move swiftly. But what the moving averages does is they smoothing, they make the movement of the price quite smooth. And then we can have a couple of moving averages. One could be a moving average, which is adding the last 20 candles, or a moving average that is adding the last 30 candles. And then the other could be a moving average that is adding the last 5 candles. So given the construction of the those lines, moving average lines, you can get things which crosses. Some of the moving average lines will be crossing each other. For example, what we've got here is we've got what we call the fast moving average, and it's only adding the previous candle. It's just like one day, it's quick. And then we've got the slow moving average. The slow moving average, which is the yellow one, it's actually adding the last 7 candlesticks on the price action. So that one is a bit slower. So the yellow is a bit slower, and then the green is very fast. What we use this to do is that whenever the fast moving average crosses the slow moving average downwards, the market is likely to go downwards. So you can see clearly that, like here, I'm going to put a line there. So the line is, let's say the line is this one. Whenever we see the moving average crossing downwards, we are expecting the market to go downwards. So you see that we probably might have crossed on this red candle, which also formed what we call a bearish engulfing. So then it formed a bearish engulfing, we expect to go down because it's crossed downwards. Whenever it crosses upwards, like on this candle, I'm about to show, put a line there. Green. Whenever it crosses upwards, let's say we would normally register on this line, we expect the market to go upwards. This thing is forming around our psychological area. We have the price action formation, and this one is crossed, meaning that we are confirming the direction of the market that is about to go up. You So these are tools that help us. Let's do a couple more. For example, here, you see that this thing is crossed. We have what we call a tweezer top. And then we expect that when we get to the top, the market should go down. And then we went down for a bit, about 3%. Now we crossed again here, up. So we crossed again here, up. So when we crossed, we had this thing, something like a morning star kind of thing. You know what I mean? And then we realized that the market is expected to go up. When we had the break here, we went up, upwards. You see, so this indicator in the bottom, it just gives us idea of direction of the market. And then when we confluence it with our price action, then we are able to trade or have a confirmation that what we saw is true. For example, this is like an evening star. We expect the market to come downwards. Let me open it. We expect the market to come down. So these are the ways we use these two indicators. Let me bring the other one, and then we put them all together. All right. So, for example, the market is just crossed. The market is just crossed downwards. You're looking at the red line. We have a candlestick confirmation at the top that, oh, we've got something like an evening star. So the market is going to come down. The point there is we also were at the top when the market of the top of this hill, meaning that we're about to turn downwards. That confirmed. The question then is, how long can we possibly be in this trade, right? We realized that this thing kept going and 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 kept going. Then it means that we could be in the trade as long as we've not printed a green. So we also kept going and kept going and kept going. And then that would be about 6%. You see, this is a bit different to the 4-2 rule. The 4-2, we are only looking for 2%. When you're using things like these other ones, you are normally guided to be able to gain more percentage from the market, which you need to more or less like practice and practice and practice to be able to know where to come out of the market and stuff like that. Okay, now let's look at the green. The green line told us that we're about to go up, right? But then around that time, we realized that we are almost like curving up. And then we had a green light. We had a green bottom printed, a green dot printed. So when we saw the green dot printed, and also we realized that we're almost in the valley, about to climb up, it was a confirmation. Even though we've had candlestick pattern confirmations already, we then decided that, you know what, we're going to stay in the market till we almost have like a red, or we get to the top of the hill, top of this hill, which gives us a bigger percentage, about 7%. You know what I mean? And then we come out of the trade. So you could be watching it, or you could just set your take profit as you want and leave it, maybe 2% and leave it, or you can watch the trade till you get to the maximum and then you exit the trade. So we can use this thing together to be able to trade the market and make the most profit as much as we can. So let's go to another one. So there was a cross in here. So when there was a cross in this, so we have something like a tweezer bottom on these two candles, right? These two candles gave us something like a tweezer bottom here. At that time, we've crossed, knowing that we're going to go up. At that time, we've also printed a bottom, which means we printed a green, meaning we are going to get more green candles, which is going up. We would have gone into the market here and then stayed in the trade so long as we are riding up. So we realized that this one was taking us all the way up. Stay in the trade as long as we are riding up. And then once we get to the top of the hill, we come off. That's about 6%, which means that those who have the time, or you can even use psychological level to take your profit in this instance, but that is another strategy altogether. I don't want you to start thinking about it so much because we've not started that strategy. I'm only showing you how the indicator works, how we combine these indicators and we do our stuff. The strategy I would wish for you to lock down is the 4-2 strategy, because the 4-2 strategy is very, very easy. You can be at work and do it, because every 4 hours before you check it, normally you're at work for possibly 8 hours. So you check it possibly twice. at work. So 5 minutes to 1, you just come, you check it, because you get to work for maybe 9 o'clock. Maybe you get to work for 9 o'clock. Before 9, you check it. 5 minutes to 1, you check it. The next time you check will be about 5 in the evening. So that is easy, and that can fit around people who are like students, people who are like working full time. That's why I'm trying to hammer that thing in so that we master those ones, and you can equally make very good profits with that. You see, so I'm just only demonstrating these indicators for you. Let's do a couple of demonstrations and then we can move on. So, for example, we had tweezer bottoms here. At that time, we were almost like curving because you could see that the white is getting thinner, which means we are about to curve up. But then this candle has to confirm. We have to finish confirmation on this candle and then get to the red candle. By the time we got to the red candle, we see there's a crossing. There's a clear crossing over here. So then we could have gone into this trade from the bottom here all the way up to possibly the psychological level. And this trade took about 1 day, 16 hours, or 1 day and a bit of hours. Let me mark it properly. You know, so we would have gone into trade here to the top is about, it says 20 hours, right? So, and that is about 9%. The 9% is a huge, huge, huge gain. You know, so, and then the reason why we stayed in the trade was because you could see that we kept going up, going up, going up, going up before we printed the red. So we could have stayed in the trade all the time till we print a red. When we print a red, then we can come out of the trade. You know, so then with those, you can hold those trades for a very, very long time, and then you get the maximum out of it. You know, and those are the ones we use for swing trades and stuff like that. We still could use this for other type of trades, but just to make you understand exactly how these things are used, we're going to do just the last one, and then I'll show you one more indicator. Okay. So the last one is just going down. Yeah, so you can see that we got to the top, we started curling down, we printed the red. So before, when we printed the red, we also realized that we've crossed over. Now we formed the tweezer top here. So we have 3 things telling us that we are about to go down. So we went into the trade. We have first psychological level. First psychological level is about 3%. And people would normally take their money at the first psychological level, and it's good. But what could make you stay in the trade is that you realize that we are still going down. We're still going down all the way before we printed the green. So you could have stayed in the trade till the time the green gets printed, and then that gets you 7% instead of 3%. You know, so I think that is what I wanted to show you for now. There's one more indicator that I want to show you. Okay, so this indicator is a very simple one. You might have heard about it. It is called the RSI, or the stochastic RSI. So let me just go and find the RSI and show you where you can get it from. I've changed things on it. So RSI, let me bring it up again. So to find the RSI, you go to indicators, and then you type in RSI. The one we are looking for is, what's the one with crypt? 1 minute. There's one that we love using instead of ES stock crypt. Okay, let me find it. Yeah, stock. There's a one. Oh God, it's telling me to upgrade price. Yeah. So the one we are looking for is this one. Look at it very carefully. I've opened that already because I've opened lots of indicators. It's asking me to upgrade. But this is the one we're looking. LS smooth stochastic oscillator crypt. This one. This is the one. Okay, so when you open it, normally it comes up like this. But I've changed some of the colors. You see a red dot at the top. So let me go and edit it and show you how it would look like. Style. You see a red dot like this at the top. And then a blue dot at the bottom. Meaning, and the way this thing works is very, very simple. It follows the same thing like the wave trend cross. So what it is you realize that when we are walking this, when we are walking the line, the price goes down as we walk it. So I'm walking the line, look at the price action at the top. Let me put it down. So as you walk the line, you realize that the price keeps going down. As the curves, as you walk the curves, the price also reacts the same way. The same way. So normally when you go into a trade, you use it to guide you as to where do you think the trade is going to end, or the trade is going to curve the opposite way. It's the same thing as the as this one, basically the same. The thing is, this one at the top, we found that it works a little bit better than the stochastics, but I'll just thought I'll show you because most traders will use stochastics. Stochastics just to tell you that the market is at the top or the market is at the bottom and it's about to go up or it's about to come down. Just a general guide. So these are the indicators, 3 indicators that I thought I would show you, which we might need it for future strategies that we would introduce. So I think having said that, what next? The next thing I'm going to do is I think I promised. If people do have coins that they want to find psychological levels for, like let's say you've gone and you've added a coin, something with USDT. Let's say, for example, you've added something like Atom, and this is something that somebody wanted me to give him the psychological level for, and you need help with the psychological level. Just put the information. You can either send me a direct text message or put it on the group. Then I'll find it. I'll do the psychological levels and walk you guys through it and show you how we approach or how we got the psychological levels. You see, so that's what I just wanted to know. The other thing is Bybit. Try and watch more videos on Bybit so that you can know how to use the platform, because that is where we do everything. You know what I mean? Like, for example, I've been to Bybit, I've done trades today, look at it, and stuff like that. So please, what I want you to also do is familiarize yourself with Bybit, and then you would be able to just get into trades as they come up, and it will be very easy and quick for you. All right, so I think that's all for today. I'm going to open the floor for questions.